What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we hit our downside price targets followed by a huge volume strong bounce in the markets. Where are we going from here? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 2.64% and yesterday the video's title was little down, big up, and that seems to be exactly what we had happen today. Now, if you're sitting there wondering why is the market rallying when we just got bad CPI data and there is no sign that inflation is abating, it is because the market is strictly moving on technicals here, and we did expect to see a very large bounce off of SPY 350. And if you're in the Stocks Channel Trading Discord, you know that we absolutely crushed the market today. Going into CPI, we were expecting to hit the price target at 350 followed by a strong bounce, and many people took advantage of that and made a ton of money today. And I'm very happy to see that patience paying off. Remember, half the battle in trading is patience, because a lot of the times you simply just need to wait for the perfect setup, and that gap down open at the price target was an absolute no-brainer buy and a very strong support level to go long at. And as you can tell, a lot of people did so because we had huge volume buying today. So now the question is, where are we going from here? And before you get overly excited just because we've seen a strong bounce on high volume, you do have to remember that we are still in a bear market, so we're not necessarily expecting to just go right back up, back to the previous highs without some type of very significant resistance levels. So the very first resistance level you need to pay attention to is going to be this zone at the 20 simple moving average and the gap fill, which is going to be between 369 all the way up to about 373. And then of course we have the previous daily high at 378. It is possible even with this strong bounce that we get all the way up into this resistance zone and still get rejected and come back down and make another lower low, because we are still in a downtrend. Now, whether or not this happens is to be determined, but this does look like a possible scenario. And of course we do have the bear living up here right around SPY 390. So even in the event we went all the way up to SPY 390, we are still in a bear market with a downtrend, which means we are going to see bears showing up at strong resistance levels. So for that reason, congratulations on everybody that made an absolute killing on long trades today. But you cannot get complacent and forget that the trend is still lower, which means you still need to be ready for another possible scenario where we get a lower high, lower low situation. And that is going to go hand in hand with the midterm volatility that we typically expect around the end of October into early November. So this is a very real possibility that even with this bounce that we still go make another lower low by November. So just remember that and make sure you're not completely forgetting that we're still in a downtrend. Right now, I would view this market as you're long above 358. And if we start breaking down below 358, we are very likely going into the 340s, even though we still do have strong support at 350. To the upside, you want to respect the zone between 369 to about 373, which is the gap fill, and then the critical daily high resistance at 378. If we can break all the way back over 378, I do believe we can get up to about 384, all the way up to about 390. But that's to be determined because we need the price action to prove it, which means we'll need the price action breaking out through the 370s and then getting back over 378. So remember, this is still a downtrend until it's not, even though I am very bullish in the short term for a continuation of this bounce. That does not guarantee we won't get rejected from resistance and still continue to make lower lows. So remember, there's a big difference between investing and trading, and right now as a trader, you need to be very cautious going against the trend for any prolonged period of time. And as investors, you just need to continue to accumulate at those levels that you're happy with, and then be willing to hold for 12 months or longer. On the Nasdaq 100 triple Qs, we were up 2.35%, and the triple Qs also had a very strong bounce off of the support, which was that level at 258 and the bottom of the downtrending channel right around 255. And as you can tell, we closed all the way back over 267, which is a very bullish close. And of course, it was on very high volume. So on the triple Qs, the critical resistance zone is going to be right around 275 all the way up to the gap fill right around 280. And if we get the break above 280, you're looking for that critical resistance at 284. And then above 284, the bear is sitting right up there at 293. If you can break all the way back above all of that resistance and close above 293, then we can start talking about more bullish scenarios. But right now, there is still the possibility we get rejected and still continue into the downtrend. So yes, while we are bouncing and we are bullish in the very near term, you still have to remember this is a downtrend and we are very likely going to continue into the downtrend until we break it. Breaking the downtrend is going to require price action to start making higher lows followed by higher highs, and we are going to wait until the price action confirms the reversal of the downtrend, and then we will instantly start to get more bullish. So watch these critical support and resistance levels, and do respect the fact that we are seeing high volume buying, and I never suggest ignoring high volume buying because that is always going to be the first indication of a possible bottom, even though we have nothing more than a single green candle to go by. So we cannot confidently say that any bottoms are in, so you need to continue to respect this downtrend. On the Dow Jones, we were up 2.88%, and the Dow Jones has one of the most impressive bullish engulfing candles that I think I have ever seen in the Dow Jones, bouncing off of that support at 287 and closing all the way back over $300, which means we have a bullish engulfing candle that engulfs about the last 2 weeks of daily candle price action. We went through 2 gaps today, including the gap up here just below 300, and we're right up here near this resistance zone around 300 to about 303, which is going to be the bullish breakout. Above 303, we're coming all the way back up to the critical risk level at 312, and that is a very bullish breakout if we see the Dow Jones breaking above 303. To the downside, look for possible support right around 298 to 293, and of course we still do have the elephant in the room of the weekly gap at 285, so there's still the possibility we are eventually going to get rejected from resistance and still go make one of these lower lows to fully close the weekly gap before we can go any higher. So do not get overly bullish if we see rejection from any of this upside resistance. You need to respect the fact that we are still in a downtrend. On the Russell 2000 IWM ETF, we were up 2.48%, and we saw a very strong bounce off the previous June lows and the September lows, because remember, the small caps have not yet broken down below the June lows, which is going to be that price target at 159.5. So with a very high volume bounce off of support, we're right back up to nearly closing the gap at 173, and the bull breakout above 173 should send us back up to 176 and then 178. Continue to respect the fact that we are in a downtrend, but if we do break over 176, this is going to look like a confirmed double bottom, which means we could go much higher to possibly fill some of the gaps to the upside. So this is still a downtrend, but if we start breaking upside resistance, we'll instantly need to become more bullish, as we're starting to see a shift in the price action and breaking out to higher lows and higher highs. On the ARKK ETF, we were down 0.22% today, and ARKK basically bounced off of our price target within 5 cents, because our price target was sitting right there at 33.7, and that is exactly where the ARK ETF found support today. We bounced off that price target and came all the way back up to the breakdown, which was the break below 36.5. So we are still in a downtrend until ARKK can get back all the way back over 41. If we continue lower, ARKK is very likely heading to $30, even though you need to continue to respect the price target of support at 33.7. On the VIX, we were down nearly 5% today, as the VIX is still closing well above 30, still in a bull trend, so we still have a very volatile market. But like I always continue to remind you, volatility can work in both directions, and that is exactly what you saw today. Just because the VIX is above 30 does not guarantee we are only going to go lower, and that is why you saw such a very strong and volatile bounce today, because we did see the VIX getting crushed as it was trying to break above the previous daily high just below 34. The bullish breakdown in the VIX is going to be the next time the VIX breaks down below 28, and of course getting back down below 30 is going to be the first step along that path. Continue to respect that it's going to remain a very volatile market while the VIX is in the 30s. On Bitcoin, we're currently up 1.3% as Bitcoin continues to find buyers around this support zone at 19,000, and we are now building a bullish hammer from the lows, because intraday we did hit as low as 18,000, but we just continue to find buyers below 19,000 and can't close below it. As I continue to tell you, Bitcoin is a trading range between 19,000 and 20,000 until we get a daily close above the range or below the support, and the next leg lower will be 17,000 and the next leg higher will be 22,000. On Amazon, we were down 0.33% today, as Amazon did get the breakdown below the support at 113 and did hit our next leg lower price target at 106. If we get rejected from 113, look for a retest of 106 or the next leg lower at 102. And if we break over 113, look for resistance at 117, the gap fill at 120, and the previous daily high at 121. On Microsoft stock, we were up 3.76% today, as Microsoft had a very strong bounce off of this zone right around 220 and came all the way back up to breaking back over 231, and we're currently sitting right around 234. We're going to have resistance on Microsoft at 238, 242, the gap fill all the way up here at 246, and the previous resistance and 50 EMA at 252. If we get rejected from 238 and continue lower, look for a retest of the low down here at 219. On Nvidia, we were up 4% today, and Nvidia did get the bounce off of this zone right around 109, and we're back over 116 with upside resistance at 122, 126, and the resistance trend line around 128. On Tesla stock, we were up 2.06% today as Tesla did hit that very critical downside support at 209 and did have a very strong bounce off of that support. We're back over the price target at 219 and we're just below the 5 EMA. So upside resistance from here is going to be right around 224, 231, and the gap fill at 235. And if we break 209, there's still a very real possibility of capitulation in this stock, and we do have earnings right around the corner. On Apple, we were up 3.36% as we saw Apple breaking down below the support at 136 and well on its way to closing that gap at 133, but we did find buyers right around the 134 range, and we did see a very strong bounce all the way back up to 143. From here, we could fill the gap fully at 145, and then we'll have very critical resistance at 147. And if we can break 147, the next resistance will be right here at 150. To the downside, continue to look for support at 138, 136, and the gap fill at 133. On the financials, we were up 4.13% as the financials had a very strong bounce off of that support right around $30 and came all the way back up and fully filled the gap right there at 31.57. We're right here at the 20 simple moving average, and we're still making lower highs and lower lows, and we do have bank earnings coming up tomorrow. So we are very soon going to know if the financials are breaking out of the downtrend or just getting a dead cat bounce before more downside. The industrials were up 2.21%, coming back down to the previous lows, which is right here just below 83, and getting a very strong bounce all the way back above resistance, which was right around 85 to 86. The healthcare sector was up 2.33%, bouncing off of the June lows around 120 and getting a bounce all the way back up to resistance just below 125. The energy sector was up 4.08%, bouncing off of that support zone right around 79 and getting a bullish breakout close back over 83, which means we can come back up to 84 all the way up to about 87. So jumping back over to the S&P 500, without a doubt, this was a very strong bounce on very high volume right off of our critical support and price target at SPY 350, which does mean we could see some follow through and we could see some legs to this bounce. That doesn't guarantee the downtrend is over, and that doesn't guarantee we can't find resistance somewhere just above and continue lower. So continue to respect the fact that we are getting a bounce, but at any point we could see bears showing up at resistance and continue to drive prices lower. So if you're staying long on this market, make sure you're setting your risk right here at SPY 358 or 350 and get a lot more cautious if we see a rejection from resistance, because we are still on a confirmed downtrend of lower highs and lower lows. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. If you want to learn more about Bank or want to subscribe, you can click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.